The offshore oil business is gushing again, and I love that terminology being used by the Wall Street Journal. Offshore oil sector is really booming, and now we're starting to see major publications starting to cover this theme and this macro analysis that we covered a few months ago in these previous videos. The stocks have run up fabulously well. 2022, when a lot of things were heading down, Facebook, Tesla, etc., crashing, this sector was just printing gains on a daily basis, and it started off the new year exceptionally well, and I foresee this continuing in 2023. And in this video, we're just going to look at some of the positive news for this sector. So firstly, this is the Wall Street Journal, a very major popular publication that is covering, surprisingly, oil. So let's just go through this article and look at some of the key points that were made that really make it seem that we're really onto a winner here. So firstly, you can see here, they covered that roughly 600 rigs worldwide were available to lease for the offshore projects in December 2022. That was about 90% utilization, working or under contract to do so, which is up 63% from 5 years earlier. So we can already see utilization is on the rise. This will start to push up the day rates as well, which they go further down to cover. So you can see the contracts right now are charging oil companies to lease the drills for $400K a day, which is already up from $300K early last year, and before that it was $200K. And analysts foresee rates exceeding $500K next year. So they count that Saudi Arabia and United Emirates are really relying heavily on offshore to increase the oil production capacity by 1 million barrels a day by 2027. Again, we already covered all of this in our previous video, so it's great to actually see a major publication also coming on board. So here you have 2012. At the peak, day rates really hit 700K, right? And as you can see, they just after 2014, with shale coming online, it just destroyed oil production, and no one wanted to drill offshore because shale was so cheap to drill onshore. But as you can see, it started to tick up from 2018, and then the COVID lows basically kept it down at these lower ranges. And these lower ranges, these companies all went bankrupt. They weren't just making money. Yeah, and I expect these day rates to actually exceed the 700K level if we just take adjusted prices into our analysis. And as you can see, like 700,000. Right, and we calculate. So day rates should hit, if they were to hit the peak of 2012, in today's term, they would be at $900,000 a day, which I expect will rate the stocks much higher than where they are now. So we're expecting day rates to go back up to the highs and to exceed those, to be inflation adjusted as well. Good stuff here, Middle East. It shows you like where the contract, etc. Pretty good article. Very good to see it in a main publication, and the bullish news keeps on continuing, as now we have buy side analyst. Here we have Barclays actually re-rating rig higher. These are the same analysts that wouldn't touch this stock when it was down in the $1, $2 range. Now they're forecasting this price target to be $6, and today's term, it's already above $6, so they're very conservative. But it's brilliant to see major publications and buy-side analysis actually re-rating this company and having a strong view. Because I think generally this is where the generalist investor, the guy with a lot of money that doesn't do his own investing, comes and looks at this kind of stuff, or has a broker looking at this kind of stuff. So yeah, this is great that analysts are reviewing it higher. I'm expecting at least $15 per share for rig. That would be book value, and if we see rates hit that 700 and inflation adjusted 900K, I can see rig trading at $20 quite nicely. My scale out zone would be between $13 to $20. 15, probably 15, 16, 17 is probably the sweet spot in the middle for me. That just gives me the percentage gains that I'm looking for as well.